Aisha, just because bulls had a day out does not mean they've gone for a summer vacation.
Exactly.
The technicals in the market, the flow picture, the global setup, the bent of the news, all of them are indicating that markets, the natural direction for market is to go higher rather than come lower. Of course, they can consolidate and go higher. Markets will not go up in a straight line. That's how markets never move. Markets could take some time to digest, and I think we will go back on its moment. They will again come back on the track. There is one data, Aisha, which I think markets are always obsessed with. And we've seen all three of us have reported, been market commentators, and we've seen that markets are always obsessed with FI number. Always obsessed. Sometimes over obsessed. Last year we were all worried that okay, markets should go down because the FIs were selling, but they did not go down because domestic
DIIs
institutional
were holding
investors
it
were
up,
buying.
yeah.
But yesterday FIs were big buyers. Domestic institutional investors were big buyers.
And still the market was
still
flat.
the market was flat. That means that there was a mild profit booking, I guess, in the market, which was not by very large institutional investors. So the institutional investors are still buying at higher levels, and that entire reversal in trade, I think, is real and is here to stay. So that gives me confidence that if markets consolidate for a day or so, then this entire attractiveness that FIs are buying, kora le raha hai, that whole psychology of the market, I think, will help the bulls to come back.
Yeah, and that's how we ended up yesterday. Like you said, it was a day off for the bulls, so it was completely flat at around 18,265. But let's move away from the FI flow and keep an eye out on all that's going on Wall Street, because apart from earnings, the street is closely eyeing what's happening when it comes to that CPI print as well. The consumer price index that's out later today, and it is going to be a fairly important gauge as well on inflation, a little bit more insight as to whether or not the kind of rate hikes that we've seen by the US Federal Reserve are really working to ease the sticky prices. You also had the New York Federal Reserve President, John Williams, and he came out with some statements cautioning that it will take time for the FOMC's actions to restore balance in the economy and return to the target of about 2%. He also said that the problems in the banking industry and their impact will be need to factored into the policy outlook. So clearly, Nikunj, it is going to be critical in terms of the CPI print overseas.
Look, I mean, that's the most important number from an inflation standpoint. And globally, it's all about interest rates and it's all about regional banks. Looks like the problem in US regional banks, that's getting sorted, that's getting arrested. But CPI, I think, is still a moving number. While the last CPI print was not all that great, this time around, in general, the expectations are that there would be a mild uptick. Now, that's the expectation, April expectation versus March expectation. You match that. The real decline of crude, I think, will kick in coming month, because we've seen a real drop in crude which was not captured or which may not be captured in the April data. So until and unless the trend line for the US CPI inflation changes, which is that it decisively moves above that comfort zone, I don't think from a market standpoint this is going to be a very market moving number. If CPI inflation is on expected lines, markets would say we knew this was coming. If markets get convinced, and I think they will only get convinced after the May data, that it is going up again above the uncomfortable zone, then you have to revisit your thesis on where inflation and interest rates are moving. As of now, I think markets are pretty much realigning to the fact that inflation has topped out, interest rates will peak out, and rate hike is out of the window.
Yeah, that seems to be the case. Having said that, we have our very own set of internal cues as well to look out for. Remember, it's the last week of the big Nifty numbers. SBI is still awaited, and today is going to be L&T's turn. You've got Dr. Reddy's, you've got smaller ones like Escorts, you've got Godrej Consumer, Gujarat Gas. All of these are slated to come out with its numbers. And of course, L&T, given the kind of thrust that we have on manufacturing right now, the commentary will be extremely critical.
It's a go-to stock right now, Asha. I mean, markets have not made an all-time high, but L&T made an all-time high when Nifty was, I think, sub 18,000. So markets, you pretty much know that which way things are moving for L&T. They are in that cycle where everything is really firing full cylinders for them in the old manufacturing space, or in the defense space, or in the entire engineering business. Hydrocarbon business is also making a comeback. So I expect L&T numbers will be strong, and markets expecting that they will remain strong. margins and commodity pricing somewhere should start also bottoming out for them. The quarter gone by, which is the Q4, obviously is always a great quarter for L&T. So I don't think from a market standpoint, order inflow, margins, commentary would be a concern. However, with L&T, what you need to understand is that how do you want to value the stock now? Because L&T is now becoming more like a sum of part, which is the traditional business and the IT business. The IT business globally is in bit of a, or IT services business is in bit of a, is going through a challenging phase. In 2021, it was reverse. The old economy business was going through a challenging phase. IT was firing full cylinders. So it's great to diversify, but when you look at a stock like L&T, you just cannot look at their construction book and make a view on the stock, because the stock move would be a function of growth in the old economy business or the old business and outlook of the IT business. This is where I think L&T now, it goes another 5-7% higher, then basis of sum of part, I think it will suddenly start looking expensive.